NDAS 7 Statement of Cash Flow. What is a statement of cash flow say? So they have money in and there is out. If that is coming in out, what you'll do? First, you have a knowledge over it. We will out now. We will purchase goods. We have income. We sell some assets or we have dividend. We have interest income or investment returns, sale of security. Something we sell it, we get it at income. I will, sorry, I have collapsed it. I will say it again. Input, output. Input now, see, first balance sheet will come. Input. We sell some goods. So that is input. We purchase some goods. Output. Sir, I'm settling my liability. That is output. So I'm not settling my liability. I'm increasing my liability. I input. I'm increasing the stocks. So money is going out. Output. I'm decreasing my stock. I'm selling it. So input. Sir, I am purchasing more asset. Output. So I'm selling some asset. Input. I received interest. Input. I paid interest. Output. So you just in the cash flow, you just need to see P and L account. Just you should see P and L account. In that P and L account, how cash works. So you should merge the P and L account with the cash. So take the bank statement, take the cash book, merge it, but you get the cash flow. In that, you just see segregate the amount, link the balance sheet items, link the P and L items. You mix it, you get that cash flow. So you will see step by step. The objective of the standard is to require the provision of information about the historical changes in cash and cash equivalent of the entity. So historic cash, but means from 1st April to 31st March. Not only this period, the previous period also. We should compare both. In statement of cash flow, which classifies the cash flow during the period from operating, investing, and financial activity. Operating business, what I do. Investing, I invest in some things. Financial activities, interest income, cash, bank loan, these are the things. The cash comprises of cash in hand and demand deposit. So these are the two things that are in the cash. There's no other things under. The cash equivalent is short-term, highly liquid investment and are readily convertible into no amount of cash and which is subject to insignificant risk and the value change in value. Bitcoin can be considered as a cash equivalent, no, because there is a significant change in value. So you can't say it as a cash equivalent. But you can say gold, silver is readily convertible to cash in a short period of time. You can say investment normally qualifies cash equivalent only when it has a short maturity, says 3 months or less in the data of acquisition. So from what we got, 3 months and less, and a short maturity. I can sell it or it has maturity period deposit, whichever has to say short maturity, then it is cash equivalent. Presentation of statement of cash flow. How you we should say three activities: operating activity, investment activity, financial activity. Operating activity, investment activity, financial activities are three things. What is operating activities? The principal revenue provide activities and other activities that are not investing or financing activities. So what are the activity that are other than investing and financing activities? Operating activity. What is investing activity? You can say activity that are not other than operation activity and finance activities, investment activity. You can say that, but acquisition and disposal of long-term assets and other investment not included in cash equivalent. He is saying that so investment activities are activity which is not financial activities. What is financial activity? Financial activity now we have a short duration, but investment activity has a long duration. That's it. Financial activities that result in change in the size and composition of the contribution of equity and borrowing of the entity. So the financial activity is focusing on two things. One is equity and borrowing. Both are cash. So I given loan, I received loan. So the activity that changes the size and composition, what is there? That is composition of what? Equity and borrowing, debt to equity, bank finances. So these are the things we should focus on financial activity. So three things: operation, investing, and financing. Reporting method, cash flow from operating activities. What? Direct method, indirect method. What is the direct method? Major class of group of cash receipts and payment in the respect of operating activities are presented. So direct method is you make receipts and payments. Bank opening balance, bank closing balance, cash opening balance, cash closing balance. Add this all the receipt and payments you subtracted will get the balance. That is direct method. What is the indirect method? The profit and loss is adjusted to affect the transaction of non-cash nature. A deferral and accrual of past and future operating cash receipts or payments and income and expenses item associated with investing on financial cash flow. So the indirect method is totally they affect the transaction of non-cash nature. Deferral or accrual of past and future operation of cash. So these are the things: non-cash, deferral, accrual of past and future cash receipts and payments, cash receipts and cash payments. So these are the things to be considered. And the income and expense item associated with the investing and financial activity. So these are the items. So what are the and that are these cash receipts and cash payments that is associated with the investing and also financing of cash flow. These all be included. Reporting of foreign currency in cash flow. What is it foreign currency in cash flow? How you report it? Cash flow arising from transaction in foreign currency to be recorded in the functional currency of the entity. Usually you have a foreign currency also. Functional currency is dollar, rupees here, not dollars. So that should be followed. And using the entity's exchange rate between functional currency and the foreign currency, the date of cash flow, on what date the transaction has happened, then you should convert this to rupees. You can't have any other currency rather than functional currency. Functional currency is rupees. Convert it into functional currency. The change affecting changes in the exchange rates and cash equivalent held in foreign currency. So how that affects the changes in exchange, effect of change in exchange rates and cash equivalent held in foreign currency. How to report it as a separate part of reconciliation. So to be about separate part reconciliation, you want to put cash flow reconciliation for foreign exchange. You should put and changes in cash and cash equivalent at the beginning and end of the period. You say this is the beginning, this is the end, this is the foreign currency we have, this is foreign currency fluctuation that is considered as a gain or they considered as a loss. You should consider this is where you come. The unrealized gain and unrealized loss arising from changes in the foreign exchange currency exchange rates are not cash flows. So I have bought something and right now the value is increased or decreased. So if it increase na gain decrease na it is loss. So in this gain and loss is not forming part of the cash flow. This is not forming part of the cash flow. I will say type it again. Unrealized gain, unrealized loss arising from changes in foreign currency exchange rates. It's not a cash flow. Any gains, any loss arising from exchange fluctuation of foreign exchange, it is not cash flow. The classification of interest and dividend. How you classify interest and dividend? So we'll say interest is from investment or interest is from investment opportunity or financial opportunity. Operation, investing, and finance. These three part where the interest come from. Dividend, same thing. Non-financial institution, interest paid, interest received, dividend paid, dividend received. So non-financial institution, from that we received interest paid to them. It's financial activities. Interest received from a non-financial activity is in the investing activity. Dividend paid to non-financial activity is financial activity, and dividend received from the non-financial activity is investment activity. Very good. Financial institution, we have that the interest paid is operating activity, interest received is operating activity, dividend paid is financial activity, and dividend received is operating activity because it is part of our business. Our business is financial institution. We deal with the money. Money is our business. Money is our blood. So when money, what we interest pay for the deposit we received is operating. Interest received for our loan we gave, it is operating activity. We receive a dividend based on the investment when made in the company's financial institution is operating activity. Dividend paid is a financial activity. So this you should consider. This should understand. Taxes on income, cash flow. How you consider taxes? The cash flow arising from taxes on income shall be separately disclosed and shall be classified as cash flow from operating activities. But taxes are due to operating, so taxes, unless they are specifically identified within financing and investing activity. How you identified? Sir, I have a building. I sold it, so I get gain. That gain is subject to capital gain, then investing activity. Sir, I have a gold. That gold I sold. That gold, if I sold, I got a gain out of it. That is financial activity because not an operational activity. Or I have, or I have what? Some kind of bond. That is short-term bond, less than 3 months. A client asked me, I require that bond. What is that bond? Electoral bond I have. I bought that bond and I have it in my control for 1 crore rupees. Now one of a different company asked, you have that na? You give to me. I want. I said, oh, you want that? Ah? I bought it for 1 crore. If you pay 1 crore and 3 lakhs, I will give you. Okay, he paid me 3 lakhs. The 3 lakhs arising is short-term capital gain out of currency fluctuation. That is subject to capital gain. That is in the financing activity. Understand? So something which is can be cashable. Change in the ownership and interest in subsidiaries and other business. How the change in ownership and subsidiaries affect our business? How you should see the aggregate cash flow arising from obtaining and losing control of subsidiaries and other business shall be presented separately and classified as investing activity. So I'm a company. This company I hold 90%. Other company I hold 75%. Now, when I reducing my activity, I lost this company loses control over this, right? Right. That you should disclose separately. You should not disclose somewhere. You should disclose separately. Non-cash transaction. What is non-cash transaction? Non-cash transactions, investing and financing transaction that do not require to use cash or cash equivalent. You don't require to use cash and cash equivalent. Shall be excluded from statement of cash flow. So non-cash transaction should not be there in cash flow because cash flow is how the cash flow. If we use indirect method, that you can use. Such transaction shall be disclosed elsewhere in financial statement in a way that provides all the relevant information about the investing and financing activity. But it should be disclosed in notes of account stating that this much is the amount that may be received for us. Some kind of information you need to give. Okay. changes in liability arising from financial activities. Then my financial activities, the liability is changing. So what? Entity shall provide disclosures that enable user of financial statement to shareholder to evaluate the change in liability arising from financial activity, including both change arising from cash flow and non-cash changes. The financial activity, what there will be there. So I got loan, I repaid the loan. You should disclose I have repaid. So I got a new loan. You should disclose. I have a leasing. I acquired a lease for 3 months. I sold a lease for 3 months. Some kind of financial activity should be there. The component of cash and cash equivalent. The entity shall disclose a component of cash and cash equivalents and shall present a reconciliation of amount in the statement of cash flow with an equivalent items reported in balance sheet. Balance sheet, you say cash and cash equivalent. That cash and cash equivalent should match with this cash flow. So whatever you disclose in the cash and cash equivalent should be reconciled with the cash and cash equivalent in the balance sheet. Other disclosure. Because in the balance sheet you have cash and cash equivalent. Same thing in cash flow account. The last you will say cash in, cash out for compute. This cash out should match this cash in cash equivalent or cash balance on 31st March. So that is what's said in this component. Okay. The disclosure. The entity shall disclose together in the commentary by the management. Management commentary, management report they should mention. Amount of significant cash and significant cash equivalent balances that is held by the entity that are not available for use by the group in the consolidated as well as separate financial statement. So what they know, they need to disclose something. What they need to disclose? Cash and cash equivalent of what the entity make you consolidated financial statement. My consolidated financial statement based upon their holding, they will say this much cash they have, and they should say that it is a consolidated cash. We can't use the cash because it's a group cash. Okay, you should identify that. This is the thing, other disclosure. By the entity that not available for use by the group in the consolidated as well as separate financial statement. What they can use, what they cannot use. What is a cash, what is a non-cash that they need to disclose. What the cash they can use, what the cash they can't use. What is a non-cash that they need to use, they need to establish in the other disclosure report. Thank you.